Speaking of taking stock, we're bringing in Clark Hodges, a financial strategist. And, you know, we've always got our eye on that 401k envelope that comes to the house or when you check it online. Do you look? Do you not look? And everybody's kind of had their eye on things since Brexit. But there's always something new to worry about and look at when it comes to your eventual retirement plan. We're going to talk to Clark this morning about stock buyback. Clark, explain, and should we be concerned?
No, I don't think you should be concerned. Stock buybacks happen all the time. They're happening in good markets. They're happening in bad markets. A lot of negative. And let's just say that companies do it to, quote-unquote, cook the books, make their earnings look better. If you retire, if you're buying your own stock, when you're taking your stock out of circulation. So, for example, if you have 1 million shares outstanding and you make $1 million in income, there's $1 per share profit in earnings. And so if you reduce that million number of shares outstanding and make that same $1 million, then you're going to make more. And so you're going to look better. And so that's the negative take on it. But corporations, boards of directors sit there and look at the landscape. They look at their own business and they say to themselves, if we have cash on our balance sheet and you can't earn money on cash right now, you're not going to make money in CDs. You're not going to make money in bonds unless you tie it up for 30 years. And so sometimes the best use of that cash is either pay a dividend to your shareholder or buy in your own stock. And there's nothing wrong with that. I don't see anything wrong with it. And analysts are smart enough to realize that companies are doing it to make themselves look better when their business isn't as good. They can see through that.
All right, Clark Hodges joining us this morning on Memphis Morning News. Well, the stock market is just, I mean, we're in the stratosphere it seems like on the Dow Jones Industrial Average. Even when it takes a dip, when it recovers, it seems like it's right back to where we were. Can you talk about, people talk about a bubble. Can you talk a little bit about a bubble when it comes to the stock market?
Sure. You know, one of the things that's a real truism in the market, I believe, is that the market is, when things are negative and you see the market going up, that's a good sign for bulls because people are unloving this market right now. The market's at highs. Nobody likes it. Nobody's participating in it. A lot of people are saying, how can this market be doing this? When everything's euphoric, when everyone says the greatest thing in the world is to invest in stock, and you make money every day, you can't lose, and you hear those kinds of mental talk around the parties and the taxi cab rides, then you know, hey, we're at a risk here for a bubble to burst. And so right now I do not see a euphoric state at all. I think the market is doing very, very well in the face of a negative sentiment out there, and that's a good sign if you're a bull.
Yeah. Yeah, I was taking a look at my quarterly 401k statement. Things seem to be looking pretty good at this point. Historically, and this is maybe off topic just a little bit, the presidential elections oftentimes influence some of these holdings in stocks and 401k.
Well, typically, a presidential election year is a pretty good year in the market. You usually have, positive sentiment out there. Things are looking good. The economic numbers seem to do well. And generally speaking, I think most people would tell you election years are good years in the market. One thing that this year brings is a little bit different type of candidate for both sides, really, and the unknown. But the market does not like uncertainty. And so once Donald Trump and Hillary Clinton became the presumptive nominees of their party, if the market didn't like it, it would have reacted. It would have reacted in a bad way. So the market is telling everybody, hey, we don't care who wins. Either person that wins is okay with us. And so that's a good thing, especially this year. It's a little bit different. I suspect as we get closer to the election, the economic numbers, the job numbers will even look better. And, it's been a positive year. The first half of the year was not good as far as the market goes. The second half is starting out much better. And hopefully, we're in for a little bull run up to the election or after.
All right.
Good job, Clark. We'll continue to talk to you, and we'll talk to you frequently enough to know if we should just leave the envelope on the counter of the 401k or if we should explore it more. Financial strategist Clark Hodges, thanks for joining us today on Memphis Morning News.
Guys, appreciate it.